Today we're going to talk about the bank reconciliation format. And I want to emphasize right from the beginning that the format for creating this bank reconciliation could be varied. So don't get used to any one format, because you'll see in your working papers and on your assignments, they'll give it in different ways. So you just need to understand the process and how you try to make sure that what you have in your account for your cash matches what the bank is saying. So we have to make adjustments to both. And that's the process we're going to go through here today. What we'll do is we'll talk about it for a little bit, and then we're going to actually do a practice one. It's a pretty simple one, but you're going to need to know how to actually complete what's called a bank reconciliation. Okay, so for the first thing we're going to talk about is bank reconciliation. You get a bank statement, correct? How often?
Once a month.
Once a month. And it shows all the transactions that have affected your account, correct? What do you do when you get that bank statement? What do you do with it? File it?
Go to your register.
Okay, you're going to go to your registry, and you're going to make sure that what it says is on it that has been deducted and added matches your records. So you're going to look at that bank statement and compare it to your records for your business. Like you're going to check off the checks that have cleared, make sure deposits you say you've made have been showing on your bank statement. You're going to go through all of that process of checking off, and we're going to do a practice one of that here in a few minutes. But right now we're just going to talk about it. Okay, so you check them all off, and once you've checked off everything, is there anything that may be on the bank statement that you haven't recorded yet? Can you think of anything? Service fees. If you have service fees on your account, those will show up on the bank statement, and then you're going to have to record them because you haven't deducted them yet. Anything else you can think of that could show up on that bank statement?
Could not show unprocessed checks.
Could show any kind of processing fee for whatever it is. So not just a service charge, but another kind of processing fee. Maybe for a loan or something. Could show, okay, NSF means what? What does that term mean? NSF.
Non-sufficient funds.
Non-sufficient funds. That means that someone made a payment to you in the form of a check. You went to deposit it into your account, put it on your records, and then what happened? There was not enough money to cover it from the person that gave it to you, and so it was withdrawn from your account. So you need to update your records to show that. What else could be on that bank statement that you have not recorded?
Bank fees.
Okay, we already talked about bank fees, NSF, anything else? Pardon? Okay, deposits in transit won't show on there, but you'll be able to identify deposits that you made that the bank hasn't received yet. How could that happen? How could you have made a deposit and it doesn't show on the bank statement?
The bank is slow.
You might have made it over the weekend through the automated teller, and it just didn't make it through their processing. So therefore, you've recorded it on your books, but the bank didn't show it on their statement yet. Okay? So what we're going to do is we're going to identify all those discrepancies between our records and what the bank statement shows. Once we've done that and identified those items, then we're going to do a formal form called a bank reconciliation. Okay? And an example of a two-column bank reconciliation would have some categories like this. Take a look at the left side here. And it doesn't have to be the left side. You could switch sides. Again, this is whatever way you want to do it. It's not specific one way like it is for some of the financial statements. So we start with the checkbook balance. Where are we going to find that? in the checkbook. Hopefully you've kept a running tally after every deposit and every... Where else will we find that? In the ledger account for cash, hopefully. If not checkbook, but certainly for everything, all kinds of accounts. Now, again, what would be on the bank statement that would positively affect our checkbook balance that we wouldn't know until we received that bank statement? Pardon? Okay, first of all, positively. Yes, something we don't see too much of. So if you earned any interest on your account, that's not been recorded on our books, has it? So we would have to add that to our checkbook balance. What else would we have to add? Maybe there's some what's called notes that the bank is collecting for us from somebody, and they have collected that funds for us and they would put it into our accounts. So if that's reflected on there, we're going to add it to our checkbook balance. And again, look at the subtractions up here. What do they include? Service fees, any of them. Just for having the account sometimes for processing certain items. Anything that is a fee to us, we're going to have to put it in our records because our cash won't show the correct amount. They've taken it out of our account at the bank, so we need to take it off our records for the business. NSF checks, we put it into our records as having received the money, deposited it in the bank, and then the bank finds out they cannot clear them, so they have to take it out of our account. So again, we're going to have to subtract that from the checkbook balance. And once we do all those additions and subtractions, we come up with something called a reconciled checkbook balance, which means we've reconciled it to the bank statement itself. And that amount should agree with what we determined to be the reconciled bank balance also. So let's look at the other side. When you get your statement from the bank, it has your ending balance at the end of a certain month or a period of time, correct? So that's what you're going to plug into that top number. Bank balance as of the statement date. What things will affect that bank balance? All right, maybe you did do an ATM deposit over the weekend and the bank statement didn't process it. So according to the records of the business, however, you see it was made. So you're going to add it to the bank balance. We don't want to add it to ours because we already have. But we need to add it to the bank balance. So deposits in transit. Deposits we think we've made, but the bank hasn't processed yet. What deductions? Outstanding checks. And what are those? Checks that the business has written but haven't been processed for payment. So therefore the money is still in your account, correct? So because we've deducted it from our records doesn't mean the bank is going to do so until those checks have cleared for payment. So you're going to list all of those outstanding checks. And what are you going to list them by? Check number. What if that information isn't given to you? You're going to list them by dates and amounts, okay? But usually the check numbers are the easiest way to go because that identifies the specific check and amount. So you're going to list them all, not just the total amount of all the outstanding checks, but each specific check. And that's going to get deducted from the bank statement balance. And the result should be something called a reconciled, often called an adjusted bank balance. And what do you think should happen at the end when you reconcile both sides or both accounts? It should balance. And if it doesn't, there's something you've still missed, so you need to revisit. either you've missed something that was recorded on one and not the other, or errors can be made. Can bank make an error? Yeah. So even though you assume, a lot of people do, that the bank's amounts are correct, they may not be. So you have to really check them carefully, not just each check number and date, but also the amount of that check. Okay? Let's take a look at an example. Okay. Notice at the top, it's just the name of the company, what it is, and a date, like we've seen before. And then this one puts it in 2 columns, although you don't have to. And it doesn't matter if you put the checkbook balance on the left or the checkbook balance on the right. But let's take a look one more time at the different ones that affect which balance side. Checkbook balance. Additions. This one has EFT leasing. What do you think that is? What is EFT? Good. Electronic funds transferred. Meaning it's automatically, electronically transferred to your account. So are you getting a check for it? So you may not have it recorded. That's why we're going to add it here, because you saw it on the bank statement. Now, you earn some interest. A good thing. Anastasia? Oh, that's just a process that could have been for that specific company. But it's also, you lease that kind of transaction processing for EFT, electronic funds transfer. It has to be set up with your bank. What's the error? This is a tough one. It says error, overstated. You wrote the check for incorrect amount. Ever happen? Never. Yes. So what you're going to do is you're going to make the adjustment here. That could result in an addition to your checkbook balance or a deduction, depending on if you overstated it or understated it. Did you make it out for more than it was in your books, or did you make it out for less? And we'll go through some practice on that one too. Now, look at the deductions. Service charges. What else? NSF check. What's the EFT health insurance payment? Yeah, you electronically paid your health insurance through your account. Now, it could be on here, but you may have already set it up in your books to automatically record it every time. So it may not happen on the bank reconciliation unless it changes from month to month, and you have to rely on your bank statement to tell you what it is. Now, look at the bank one. Again, deposits in transit. They're usually going to get recorded by date. The date of the deposit and the amount of the deposit. And deductions are going to be outstanding checks. Again, checks that you have written but have not cleared the bank. And again, you're going to list them by usually check number if that information is given to you. And the total of all of them gets deducted from the balance above it to come up with what's called a reconciled balance. Now, reconciled balance. Now, the big question that I know a lot of you are asking is, once you do this, okay, it's nice. Auditor's going to want to come and see this to make sure you're reconciled to your bank statement. But there's still information from this that needs to be recorded. And what is that? Okay? Basically, the answer to that is anything that impacts your checkbook balance needs to now get journalized. Let's think about it. With things on the other side, deposits in transit, have we recorded those? Yes. So we don't need to do anything with that. Outstanding checks, have we recorded those? Yes. So only the information that affects the checkbook balance gets journalized. So what's the first thing I would journalize up here?
The interest error.
We could do interest. How would you journalize interest? Okay. It would be probably a new account you haven't had before. But what would get debited to record that interest earned? Cash. Cash for $112.04. What would be the credit for that transaction? It could be called interest earned. It could be called interest income, which we'll learn later is something called other income. Something similar, some kind of a revenue account there. Now, let's look at the EFT leasing. Okay? What is that going to be? Depends on where it's coming for or what it's coming for. But we know that the positive is going to be which account? Cash. And then whatever source this is coming for, what source of revenue it's coming for. What about deductions? How are we going to deal with those negatives to our checkbook balance? Right, we're going to credit cash because we're reducing the cash in our account. So for service charge, you may find that you want to create an expense for bank service fees. So bank service fee expense, or banking expense, or service fee expense, anything similar to that. You may find that you don't. You just want to lump it into that miscellaneous expense. So it depends on your chart of accounts. But you'll debit the expense, and then you'll credit cash. Make sense? Cash is going down because you're going to take it out of your account. NSF checks. So someone had paid us. Now we need to show it as back on their account and reduce our cash. How would you journalize that one? Good. You're going to debit accounts receivable again because we credited it before to take it off. And now we need to put it back on. They owe us again, plus some fees, but we won't deal with that right now. And then you're going to credit cash because it's no longer in our account. And the health insurance payment, how are you going to deal with that one? Good. Health insurance expense probably. And then credit cash. So those are the items that affect the checkbook balance that we then journalize. Everyone understand that? What are we going to use for the date? The date of this bank statement. So whatever date that happens to be. Okay? So it's at the end of this cycle. And we're going to practice this, so if it's still not quite clear, we'll do it. So, bank reconciliation journal entries. Two kinds of items appearing on a bank statement. Errors in the depositor's books. So if the depositor's books were incorrect, you had recorded things wrong, you're going to have to make a journal entry correcting that. Bank additions and deductions that do not already appear on the books, and which side of the bank reconciliation will those appear on? Those affecting the checkbook balance only. So those additions and subtractions affecting the checkbook balance only will have to be journalized. Okay? Once you do that journal entry for those items, then you should match what the bank is saying you have, and you're ready to start your next month. But until then, you're inaccurately reflecting the amount of cash that you have in the bank. So that's why we do a bank reconciliation, to make sure it's accurate. Otherwise, someone could be taking money from you, and if you don't keep doing bank recs and checking it, months go by and you don't discover this, and that's how big amounts of embezzlement happen. Okay, let's do a pause. We're going to take a look at a bank statement here, and if you know people that aren't here today This is actually available on the Moodle site under Bank Reconciliation Practice, so they could also do it on their own. Just open it up, and it's a spreadsheet with 2 different businesses. We're going to do at least one of them today, if not both of them. And we're going to take you through the process of what you do when you get that bank statement. So here's an example of a bank statement. And below it is an example of a check register that goes for your business. What would be the first step once you get this bank statement in reconciling your books? Get your checkbook out, like it's shown here, and start checking off things that have cleared and are recorded correctly on the bank statement. So let's start doing that. You're going to go through everything that's in your check register and check it off from the bank statement to see if there's anything incorrect or missing or additional. So go through all of those things. Compare the check register to the bank statement and see if there are any things that are different or missing. And once we identify those, then we're ready to begin creating the bank reconciliation. So go ahead and do that first. Okay, so let's actually create a bank reconciliation from the form that we're looking at. First of all, look at the heading. It's the person or business name, followed by what it is, bank reconciliation, and then the date. Now, we're going to start with either one. It doesn't matter. So let's go ahead and start with bank statement balance. So where are we going to find this? On your bank statement. Should be the balance at the end on September 30th, 237.25, correct? You simply plug it in. Now, what kind of things would we add to this beginning balance or ending balance for the bank? Good. Any deposits in transit? If there are any, there may not be. Did you find any? Yes. One on the 30th. That makes sense at the end of the cycle for the banking statement. And how much was it? Was it on the 27th? Okay, so how much was it? $100. And again, that's going to get added to the previous statement from the bank. Now, we're going to deduct something called outstanding checks. So how many did you find? 2. Which numbers? 1004 and 1006. Now notice what I've done here. Since there's more than one, I've listed them to the left because I want to get the total of all outstanding checks, because that's directly going to impact what's above it. So 100 plus 25, of course, is 125. And if I take the beginning balance from the bank statement, add the deposit in transit, and subtract the outstanding checks, what do you get? Yeah, 212.25, I'm hoping. And again, what is that called? Either a reconciled bank balance or adjusted. Either one is fine. Doesn't matter which one. So what we've done here is we've updated the bank statement balance to our records. And now we need to do the other side of it. So you need to look in your checkbook register, and on September 30th, put down what the balance shows. And how much does it show? Good. 217.25. Now, did we earn any interest or have any additions that showed on the bank statement that we had not recorded? Darn it. No. No interest. So therefore, we're going to look for deductions. What deductions did you find on the bank statement that we have not recorded? Good. A service charge of $5. Anything else? Any errors? Any insufficient funds checks? Nope. So we're just going to subtract that from our checkbook balance. And we're going to get a reconciled checkbook balance of $212.25. Now the first thing you're going to do then is check to see if it agrees with your reconciled bank balance. And it does, so we can assume we have done things correctly. If it doesn't, you need to review things again to see something else that you may have missed. Now, my next question to you is, once this bank reconciliation is completed, what is your next step in this process? Journal entries. So, what are my journal entries for this bank reconciliation? First of all, which item do I need to record? Only those impacting the checkbook balance, so service charge. So, let's see. What's going to be my journal entry for this one? September 30th, what would be my debit? Okay, could be service charge expense or something like that. $5 debit. And what would be the credit? Cash. $5 credit. Once you journalize this, it takes care of this part of the bank reconciliation, and you should now agree with the bank's records. Okay? So the only one that gets journalized are those items that impact the checkbook balance on your bank reconciliation.
So do you do it before you close everything out?
Has nothing to do with closing. This is totally separate. It's just something done when you get bank statements. So every time you get a bank statement, you're going to want to reconcile it, your account, to the bank statement itself. It's something that people like to delay, but that's sometimes how, when you see someone who has been charged with embezzlement and they have this huge amount that they've embezzled, good chances no one's done bank reconciliations for a while. So they're not checking it against what's actually in the bank.